But anyways, we'll just go right into, as usual, the Forex Factory, right? So we'll go through the news together. Anyways, we'll start off Monday. Okay, pretty simple, right? Monday, I'll not be trading. Why, you might ask? But we have a USD bank holiday. What does that mean for price? So what will the market probably do? If you look at it at the bigger picture, like if you look at from a bigger, exactly, it's gonna consolidate. Good guys. Anyways, it's probably gonna consolidate on Monday. Okay, why, you might ask? That's just because we have a USD bank holiday, so there will be no volume and no volatility in the market. Tuesday, gonna be pretty good to trade. We have some minor news. We have claim count change and Empire State Manufacturing Index. Nothing big at all. This you might look into. It's pretty good. And we have annual meeting held in Davos, attended central bankers, prime ministers, finance ministers. So this is more or less the market maker meeting up. And this is the day 2 here. You have the day 1. Anyways, nothing big. There might be a big announcement. So risk a little bit less on a Tuesday. But I'd suppose there would be like no big unexpected moves. We might see some big unexpected moves, but ultimately those will just be an influx of liquidity in our way. So we don't need to be scared. It's not really that dangerous to trade on Tuesday. Of course, don't enter any trades during news, guys. That's the only thing. Anyways, Wednesday we have CPI for GBP. Okay, so you might want to stay out on GBP pairs if you don't like high impact news. I'm gonna trade all the pairs that I utilize. Hopefully my mic is good as well. Anyways, so nothing big is gonna happen. We have core retail sales and retail sales, so it's not dangerous news. Thursday, I'll also trade. Friday, I'll also trade. So looking pretty good. Okay. Friday, of course, if I have caught anything good, I'll just manage to trade through the whole week. So I'll not be more or less trading actively. If I've caught something on, we say, Wednesday, I'll manage it through Thursday and Friday. That just means I will hold it straight into the DXY weekly charts. Okay, so the DXY weekly charts simply just tells us we are overall bearish. We have an overall bearish bias. We have overall bearish order flow. How you can see that is just simply fair value gap right there. Just reacted off of the more or less 0% mark of that fair value gap. That just tells us that we're really bearish. Our drawn liquidity is here for the weekly drawn liquidity right there. This is intermediate drawn liquidity, lower time frame drawn liquidity. Pretty simple, right? We have this fair value gap right there. We have bearish order flow, and we have also some PD rays here as well, so which you can use. But yeah, we reacted off of this. You can see close down here. That just tells us that we're bearish. Anyways, let's just go into the daily. Too many reactions. Anyways, on the daily, you can see some pretty interesting things. You can see this new day opening gap right there. We have this fair value gap right there. If you remember, this is the weekly fair value gap. Anyways, we have traded up. This was news. Traded up into this. Reacted off of the 0%. This is a 4-hour fair value gap. I'll show you guys later. Reacted off of the 0% right there. Off of that fair value gap. Traded down. Closed downwards. Just tells us that we're really bearish. And we took out this. And this is in lower time frame. This is the wall of liquidity I was talking about. And we have just consolidated. So Monday, like, if you're not convinced we're going to consolidate, you will see that we are going to consolidate. Like more or less, we're gonna just extend this. So this will be extended, consolidated until Tuesday. We might also consolidate on Tuesday, but I think somewhere in this week we will be bearish. Okay, I cannot say a specific date. Anyways, here's the draw liquidity I have for this week. Well, there's the wall of liquidity you can see. So of course the market trade up into this. and we have the new day opening gap right there. Here's the 4 hour fair value gap, which I talked about. Reacted off of it, closed down here, actually closed down here. Really bearish. That just tells us that we really bearish. And opened right here. So you can see, trade up, ICT power 3. Look at this. Opened, traded up into this, reacted off of the 0% mark, traded down, closed here. So this is ICT power 3 in high time frame. This is how you look at ICT power 3. Manipulation. Okay, wait, consolidation, manipulation, and distribution. Simple guys. And I like this is like sauce, man. Anyways, we have a equal highs right here. Market took out equal highs, traded down. Just a consolidated around here. Nothing special. I would not trade in this. I will trade somewhere here in the manipulation and catch something into the distribution to the downside. So for the students, we will see an STA model right here. Catch it, hopefully, and we will just manage it through the whole week to the drawn liquidities. Perfect. That sounds like a perfect plan. And here's also the drawn liquidity right there. Matches up with the 50% mark of this fair value gap right there, if you look at it. So it's just a really good drawn liquidity. Anyways, the daily is actually bullish. Okay, so we're trading against the bullish bias, but our weekly is bearish, and you can see the order flow is bearish, right? So 4 hour is just consolidated, no special bias, right? We just consolidated. I don't know, like I would say we are bullish on this because yeah, but like there's no clear bias here, so just sit out and wait. Of course, you guys, I highly suggest you guys, if you cannot catch anything in the manipulation, or if you don't understand it, wait for the distribution and catch something in the distribution. That might be an whatever, like, or catch something if we have a large weekly bearish extension to the downside. Catch an TGIF setup to like a retrace setup. Anyways, we can also check the 1 hour, but it's nothing special. Look, we have nothing special here. We have this fair value gap right there. That's the only thing I'm seeing, and we reacted off of it here. But I'm thinking like the price will sweep this trade up into this. Yeah. Anyways, we'll just go right into EU. Okay. Here it says CP, which we tape read. Here's the drawn liquidity, so would have been stopped out. Take this away. Sorry that I didn't fix this. I haven't looked at the charts. But now I fixed it, so sorry guys. We'll just go into the weekly charts. And now also, here's the ultimate drawn liquidity right there. We have an overall bullish bias. Now remember the DXY in your head, okay? Remember the DXY. Remember what like goes on in the DXY relations, or in the DXY correlation. I'm sorry. Fair value gap right there, which we might trade into, taking this weekly low, right? STA setup right there, because it's previous weekly low, so it's time-based liquidity sweep. Okay, I'm telling you guys some sauce right there. Anyways, I don't think we will trade down here. Instead, think we will probably consolidate a bit and then take out this weekly low instead in the next weekly low, because remember there will be a new weekly low. Here's the drawn liquidity. Here's the ultimate drawn liquidity, which I'm hoping for or waiting for to get taken. Anyways, we'll just go into the daily time frame instead. I'm sorry guys. Here we have fair value gap. This is in equilibrium, so it's just pretty good utilizing it. You can have it marked out as this. If you'd like, I'll have it marked out. But the daily time frame is actually bearish, as you see right here. Weekly was bullish, as you saw. Order flow was bullish, and order flow was bearish on the DXY, if you guys remember. We have also a fair value gap here, big fair value gap. I'll not be utilizing that. Instead will be utilizing that as an drawn liquidity here, also as partial if I take a trade Anyways, let's just go into the 4 hour. 4 hours is pretty consolidated, so I'll just do this, the whole thing here, consolidated, the whole thing right there. So look what I'm gonna do. Look what I'm gonna do. Okay, just look at this. This is probably what we're gonna do. Okay. Yeah, you could also argue half point of this wick, because this wick was also an news wick, so you could use ICT wick theory, but we'll just sit and wait. Okay, I'll not take anything in this consolidation. We'll wait for it to leave.
Aren't wicks fair value though?
Exactly. Exactly. That's why we utilize them as.
Would it be weaker than a fair value gap though? No. Like an actual fair value gap.
Wait, what did you say? I'm sorry.
Because wicks are fair value, right?
Yep, completely.
So would it be weaker than normal fair value gap though?
No, it's the same as fair value gap, as strong as a fair value gap. So if you utilize it in combination with the right overall bias, right order flow, and more or less as you utilize a fair value gap in equilibrium as well, you could utilize wicks instead of fair value gaps. It's the same. Just that wicks is inefficient in both sides. It's inefficient in sell side delivery and buy side delivery. So I gave you some secret sauce there, right there. While fair value gaps is often inefficient in one, depending on if it's a CB or BC. Secret sauce right there of ICT wick theory. But like I'm seeing manipulation, maybe taking out this, but have the annotated, have the 50% mark of this annotated, the consequent encroachment of this wick, because it could also likely trade down depending on how bullish it is. Okay, trade down into the 50% of this, and then continue higher if it's really bullish. And everything depends on what the DXY does. If the DXY wants to continue and manipulate a little bit higher, taking out some more buy side before going and doing a sell side delivery to the downside, it will probably take out this wick and trade down into this weekly fair value gap. And if it wants to more or less, or if it does not want to take out as much buy side, it will not take out as much sell side, and instead we will take out probably this trend like liquidity and just trade down into the 50% mark right there, and continue to the drawn liquidity. Anyways, let's just go into AUD USD. Here on AUD USD, you can see that we already have reacted off of this fair value gap. This is a daily fair value gap. Our drawn liquidity is pretty clear. Is this equal highs? So, anyways, we're weekly bullish, daily is bullish, or actually bearish. I'm sorry, but we have a really good drawn liquidity. Really good drawn liquidity on EU. We have actually retraced, like I said, because I said AU will probably retrace more than EU, and now we have gotten that retracement and taken out multiple primary lows, okay, in the market.
So wouldn't that mean AUD trade will be better than the Euro trade because it's more discount?
Exactly, good bro. If we get an STA setup, it's going to be better here. And this is the underlying dynamics which I probably talked about. We have the fair value gap right there. We can see multiple reactions off of it. I think we're going to see a third if we get the manipulation, like I said. But we're probably not going to trade lower than this. Okay, and definitely not lower than this. We might go lower and trade down into the 50% mark. That would be fine because this is equal lows now. So we might just see this and then higher. But I would say it's just much more likely that these two will stay intact just because AUD has already retraced a lot. Anyways, daily bearish, 4 hour consolidated. So manipulation or consolidation, manipulation, taking out those equal highs, equal lows, and distribution to the upside. That's what I'm seeing. Anyways, hope this was really beneficial for you all.